Traders, in this video we're going to dive deeper into identifying the right places on a chart to enter and how to follow the price action rules. Price action rules allow us to time the entry properly, locate high probability setup, and the main structure of the market right now is consolidation. With slight bearish tilt, I can see that we have a lot of price swings up and down, sideways movement, flat EMA, but the session opened with slight bearish bias, series of lower highs. So the structure is more bearish rather than bullish, but overall it is a consolidation. The market is quite unclear, but shortly after news were announced, market continues working lower. Now, you want to make sure you periodically zoom out. You don't want to get tunnel vision. You don't want to focus on just too close-up picture of price action. Always make sure you understand what is the main context of the market. And I can see that right now it looks much more bearish than it initially looked. Strong bearish spike. So what I'm going to do, since this is more bearish, I'm going to try to find some downtrend, and the most reasonable downtrend right now is something like this. It fits pretty well. It's not the best fitting downtrend, but right now it keeps me on the right side of the market. It gives me bearish bias, which is what's important. And when I'm trading a bearish bias right now, I know that I need to sell because I'm going to make more money if I'm going to focus on selling. But I need to time the entry properly. I cannot just sell anywhere randomly on a chart because I don't know when it's going to pull back. If I'm going to take a good entry, I need to identify the fact where the correction is going to end. And I'm going to identify that by observing the two-legged pullback and how the correction is going to react at key entry point, either the trend line or the EMA. So price action is correcting. I'm going to redraw the short-term uptrend because there are micro trends always being present inside of the main trends. And right now we have first entry short. And also we have small resistance being formed. Now, I have a first entry short, and notice we may have a second entry short at the key entry point below EMA. The signal bar is slightly bullish, and there was no trigger anyway. You can see price action never broke below this bar, so second entry short never triggered. But right now we're starting to anticipate, okay, we're at the EMA, the bias is bearish, bulls are failing to break higher. If we get a legitimate second entry short, this may be a high probability setup. And now we have nice bearish bar. If we're going to get a break below this bar, this is going to be second entry short. And this is a first decent high probability setup for the day. Your stop loss goes one tick above the signal bar. You're scalping for 2 points. Made the scalp. And the price action keeps correcting a little bit more. So I'm going to redraw the uptrend. Okay, I have a small break in new extreme. And notice what is happening. I'm going to analyze the structure and I can see first leg up, break, second leg up. We have visual two-legged pullback, and this is important. The broader these two legs are, the less it makes sense to look for wider uptrend like this. And since it doesn't make sense to look for wider uptrend like this, because this is now how price action works, you can expect continuation of the downtrend, especially after this massive push down. This is important information because we have broad two-legged pullback indicating depletion of bullish momentum, massive push below EMA, and we have a lower high. Remember, the context is bearish. Correction played out, new extreme, massive push below EMA confirming the bearish bias. So now it's starting to make sense what's going on. Now this lower high is not confirming any high probability setup, which is what a novice trader wants to focus on. Lower highs confirming some high probability setup. This is more contextual lower high. But it is definitely a good setup because right now it's confirming we're going to continue working lower. It is close to EMA and the signal bar is great. You don't have to chase it so far down. It is next to the EMA. Great setup. You can see what a runner this could have ended up creating if you manage to catch it. Now, I can see that this channel doesn't fit really that well. I can see that we have overshoot and we have so much empty room here. So this was why I adjusted my price action a little bit. I decided to draw a channel like this. It fits quite nicely at the bottom. You can see first swing, second swing, third swing confirmation. You don't have to get married to one single channel. As price action keeps developing more and you get more information, just keep adapting. Now, why am I switching to this channel, the secondary one? Because it makes sense. Notice we first started with consolidation, and this was really the point where the true downtrend started. It was sideways structure, sideways structure, sideways structure, and suddenly big spike down. So it makes sense to look for beginning of the downtrend somewhere around this area because this is the true point where the downtrend started, and it represents the structure a little bit better, fits really well. Now, the bias still remains bearish. So as a price action trader, what I have to do? I have to wait my turn for the correction phase to play out. So I'm going to redraw once again the micro uptrend. Okay, we have a break in new extreme. This is a good sign for bears. Uptrend played out. So if we're going to break below EMA, this is a good chance that the downtrend is going to resume. And we have second entry short. But can I take it? No, because we're above EMA and the signal bar is bullish. By the time we get a double bar entry, the stop loss would be just quite big. So unfortunately, we can't really take it. You need to see push below EMA and a bearish bar. Unfortunately, we didn't get it. But you can see how price action works. Another two-legged pullback, uptrend played out. And we're at the key entry point while the trend is down. Of course, you cannot take bullish lower high, no way. And by the time you get a failed second entry long, it is so congested. EMA exactly under these bars. No trade zone, area of indecision, pure congestion. Even though it may work now, next time you may get trapped on a little fake out. Now, you expect it's going to push lower. Why? Well, because uptrend played out, two-legged pullback, EMA is permitting the bulls to break higher and the trend is down. So it makes sense for price action to continue working lower at the key entry point. When I'm observing this and I want to enter short, which is what I want to do, but I don't really have the opportunity due to congestion, what's going through my mind is a lower high breakout pullback or failed breakout above the congestion. But if you're going to break lower, it's going to be breakout pullback. Lower high, you want to see price action to free itself out of congestion. That would be good as well. Unfortunately, no breaks above these bar highs, so no technical lower high. And by the time you get technical lower high breakout pullback, you broke lower, came back, tested it, you're selling directly into these lows. Now, fortunately, you can see it didn't even trigger. There is no break below this bearish bar. But even had it trigger, I don't think you can sell directly into the low of the very day. You want to see price action closing a little bit higher, so a little bit more aggressive, but you can see how price action reacts. You have only first entry short. So even though it doesn't allow you to enter, you still want to make sure you learn the price action and you know how it forms, because next time it may form much better as a high priority setup. You can see you monitor the correction, you're drawing the channels, and you're looking for a series of high priority setups. This is why I'm marking these setups on a chart, the high priority setups, but they need to form correctly. Just because it's a two-legged pullback or lower high doesn't mean it's the high priority setup per se. You still want to see it form without congestion at the key entry point with good signal bar. So price action rules need to align for the chance on this setup working be much higher than just being, slightly better. Another first entry short, very close to being a second entry short. Actually, this is sort of like a hidden second entry short, kind of like a first entry short pullback, second entry short, but technically this is a first entry short. So, if you're more advanced, you can consider, but it feels a little bit too aggressive. Price action is correcting. We have a second entry short. What do you think? Can you sell? You cannot, because remember, every single time you pay attention if there's a short-term uptrend being in play, we can see clear one bullish leg, short-term channel is in play. I want to see break a new high, and then I can consider selling. So I'm not selling just yet. Break new extreme, okay. So what's going through my mind is, according to price action rules, this downtrend needs to get new extreme. This is why we're looking for channels, okay? We have a downtrend working lower. Most traders are right now thinking bullish because they see break of a trend line and they think reversal. That's not how price action works. Okay, now you understand price action rules. You always expect retest of a new extreme. This is what happens 8 or 9 times out of 10. Just because I expect it, it doesn't mean I can sell just instantly. Okay, I can see EMA keeps slightly holding. So I'm not going to get lured into buying, but I'm going to be patient. I want to see clear break below EMA, and I want to see some failed second entry long. I want to see EMA reject prices as a resistance. You can see we're struggling to break EMA, so I cannot sell as long as we are above EMA because I simply don't know how long the correction is going to be. I don't want to be guessing. It may work. Yeah, it very well may. Next time it may not work. I want to see clear push below EMA to confirm, okay, the sellers are in the market and they want to see new low. Okay, we have a new low, new high, so I expect failed second entry long. We have first entry long. Now we have a failed second entry long, but this failed second entry long managed to push back into this consolidation, and the signal bar is bullish. You can use double bar entry, yes, but I wanted to see EMA reject and not go back into this consolidation. For this reason, I can only mark it way more aggressive because it's not very easy. It pushed back into this trend range, not so good. But I'm going to redraw downtrend like this because I expect new low. I'm not thinking bullish. And notice what we have. We have second entry short. kind of like a new low, first entry short, pullback, second entry short, confirmation of the failed second entry long, and also it acts like a breakout pullback. You broke out of the congestion, came back, tested it. Two key entry points are holding, EMA, the trend line, great bearish bar, and because you expect new low, this is a great high probability setup to enter. Gonna mark high probability setup, second entry short, other additional reasons, and hopefully it makes sense why you're still thinking bearish. If you're using price action rules, they prevent you from getting trapped, and you can take advantage of all the early bulls who are buying too quickly without a new stream being formed. I actually took this setup myself. Unfortunately, the runner got stopped. Okay, I was expecting another second entry short, but it never formed, and market created new extreme. So I'm gonna mark new low. Now, after new low, you expect correction or reversal according to rules. But we kept pushing lower, so it looked way more bearish. Price actions reversing. You have a failed second entry short, but you cannot take it. This is way more bearish. I was even thinking about possible wider uptrend, wider downtrend. But price action keeps completely reversing. I'm actually going to adjust my channel because it is way steeper. Okay, price action is much steeper now. We are breaking new extreme for the downtrend, and now we have new high, first entry long, pullback, second entry long. This uptrend needs to get new extreme. We're at the key entry point, and this is the two-legged pullback, and this time second entry long at the EMA. Great high probability setup. High low is a bad bearish bar you can't take, and now we have a second entry short, new low, first entry short, second entry short failure, but the single bar is once again bearish. I can't take, I need much better bullish bar. And we even have high low breakout pullback, because by the time for second entry short form, you can see it managed to get congested. So you broke out of the congestion, came back, high low breakout pullback, but you're very close to creating a new high. It feels a bit aggressive. Market continues working higher. And how is the price action shaping? It's starting to look like a spike and a channel pattern, because I can see so many geometric lows right now offering us to identify spike and a channel. Something like this. Okay, we have a new high. I have to reset the count. Otherwise, it would have been great second entry long. But technically, this is just a new high because we broke above this swing. So first entry long. Okay, we have a second entry long, new high, first entry long, second entry long, confirming the spike and a channel, the EMA and this key entry point. Great high probability setup. The stop loss always goes one tick below the single bar. It's good to use limit order here because the stim is quite high. So you want to enter a little bit lower so you have room to get up before reaching these highs. Market came back, but it didn't stop you out. You're using stop loss one tick below the single bar. You still would have survived in case you're holding the trade. You have another second entry long, but you can't take it because the single bar is bad. It's below EMA. But once again, we are breaking the spike and a channel. So what is price action trader expecting? New high for the spike and a channel. You can see how nicely the geometric formation aligns with the EMA, indicating there's a spike, consolidation transforming into channel. You expect new high. So if second entry long form is bad, what am I thinking next? High low. Unfortunately, my high low is straight doji. Not even that. It's more bearish than bullish because the tail at the top is more significant. So great setup context wise, but I can't do this. This is just too indecision. Unfortunately, I need better bar, and look at it go. New high was created. Perfect price action. Right now we have a pullback. It's not easy to know what's going to happen because, okay, we're not reversing because we're back above EMA, but the spike and a channel played out. So I have nothing left to do but follow tight channels. But bias is not clear. Okay, we have a small break, new extreme. Okay, we have a second entry long here, but a little bit congested. The bias is not clear. Even if you draw a spike and a channel wider, you're getting new extreme here. Yes, you get new extreme. So, a little bit hard to read. And now it's getting way too late. The market is about to close. Now you understand how to follow price action rules, how to identify the right setups when you're trading bearish or bullish structure. You always want to identify some form of a key entry point, the one that fits the best. Break new extreme, trendline rule played out, break a new extreme to the upside, and you can see I'm marking these high probability setups for you to remember what to expect. But those setups need to form correctly at the right key entry point, without congestion, with a decent enough signal bar. Two-legged pullback is not a good high probability setup if the context is not fitting. So this is the big picture for today. I hope you had a good trading day. I'm going to wrap it up and I'm going to talk to you next time. Good luck with your trading.